Yeah, I'm definitely selling out of all these stocks right now. Screw the stock market. This thing is freaking rigged anyway. No, I mean, I'm buying stocks. What? Selling stock? Come on. How's it going, everybody? Stas here. Welcome back to another video. So in today's video, oh man, we have a lot to talk about. Like you all read in the title, the markets are down yet again. Just when you thought it might not get worse, we might see some consolidation, the markets drop another 3%. So in this video, I want to go over the S&P, the Dow, the Nasdaq, as well as a bunch of just ideas going through my head, right? What am I buying right now? What am I selling, if anything, right? As well as what stocks and ETFs am I watching here heading into the month of March in 2020? And just in general, what are my thoughts in this crazy market? How am I personally approaching this? So a lot to go over in today's video, and all I ask from you guys, if you enjoy it, just simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content like this. And don't forget to join our 100% Strive Smart Discord group chat and our Strive Smart Facebook group, linked down below in the description box. So let's just get right into it, guys. So the S&P right now, with about 30 minutes left in the session today, is down another almost 100 points. It's down 86 points to be exact, 2.8%. And if you guys have been paying attention to the channel, if you've been watching these videos, the level that I've been talking about on the S&P is around $3,000 to around $3,030. And what do you know? Voila, today with that 87 point sell-off, we are right at this level. And why was I watching it, guys? Well, very simply, on this 3-year 1-week chart that you're currently seeing, this was an old resistance, or rather an old all-time high. And the fact that we broke out of it at $3,000, that makes it a new support, right? And it's also the 50 SMA support that we're seeing here on the weekly chart. So just based on those two little technical levels, that makes this area a very strong level of support. And we talked about how if we were to sell off from 3,400, being that old all-time high, down to about $3,000, which again is where we are now, that would have been a pretty healthy 10% sell-off. And although we can't predict how far the market will drop, when the sell-off will stop, we do know one thing: whenever the market sells off 10, 15, 20% historically, it's proven to be a good buying opportunity, right? That's one thing that we do know. And anything, in my eyes, above a 10% sell-off, which again, we're on the cusp of that right now, that's extremely healthy, and that's really normal market activity. And if you guys have been in the market for a couple of years, you know this, because back in 2018, the markets took a huge dive in October to around December. This is really where the trade war, the tariff situation was at its peak. A lot of fear in the market, kind of like right now with the CV. A lot of fear in the market. Global supply chains are being disrupted. The economies are being disrupted. And what does the market hate? The market absolutely hates uncertainty. It hates just fear. Not that it hates fear, it hates uncertainty, which causes the fear. So that's kind of what we're seeing here. And again, historically, every 10, 15, 20% dip in this market has proven to be a buying opportunity. And you guys saw the chart that I shared a couple weeks ago. I'll pop it right on the screen right here. You see every single previous virus outbreak that we've seen in the U.S. from 2003 with SARS leading up to, what's the previous one? Ebola or whatever. We've rebounded 6 months after the virus was, I think it was announced as an epidemic or whatever, right? It's the market that is, it's rebounded. So keep that into consideration before you panic sell out of any of these positions. So, and you can do whatever you want, guys, at the end of the day. You're not supposed to listen to somebody on YouTube or anybody at that matter. You're supposed to, at the end of the day, at least in my opinion, when it comes to finances, you should know how to do this on your own. You can take pointers from people, of course, right? I take pointers from a lot of people. You look at people that have been successful in the past, right? And you kind of formulate your own strategy. Does everyone do that? Absolutely not. A lot of people hire people for their money, but in my opinion, I think it's good to take your financial future into your own hands. That's just my opinion. So the Dow Jones right now down almost 1,000 points, just like it has been multiple times in this past week. It's down 836 points right now, down 3.09%. And unlike the S&P, which is holding that nice critical level on the 3-year 1-week chart, the Dow Jones blew right through it. It blew right through it, and the level that we were looking at here for the Dow Jones, and like I've been talking about in these videos, is 26,500 to around 26,700. This general area here, it's an old resistance. We've actually gotten hit there 3 separate times over the past 3 years. And of course, when we broke above it, it became a new support. And the fact that we didn't hold it as a new support, that kind of worries me here and leads me to believe we may be seeing some further downside in the Dow Jones here. Let's take a look at some upcoming levels that could be, coming up here. $25,300. That's roughly 600, 700, 800 points lower than where we are right now. And at this pace, I wouldn't be surprised if we did hit that level in one more trading day. Not saying that the markets are going to crash. All I'm saying is I would not be surprised if let's say tomorrow the markets were to fill this down to maybe 25,300. And from there, guys, if we break 25,300, I'm thinking the next spot we can get to is maybe 24,200, 24.2, maybe 24.5. In general, that would be putting us on top of that 180 SMA here, and in general, that support again at around $24,300. And if we're taking a look at price action just for today, honestly, guys, it's been very rocky, up and down, and these are the types of markets where really the bulls and the bears, if they execute correctly, they can make a crap ton of money, right? It's kind of not that it's a predictable trend here because it's it's volatile, but in general here, if we're taking a look at the past 10 days of trading, we notice how it dumps off very aggressively, gets to an extreme oversold spot, and then we see a bit of a breather, a bit of a rebound. And that's kind of what we saw today. This morning, we got very oversold. I think we were down, like 80 points, 90 points on the Dow here. Then we rebounded. That opened up a bunch of day trades in individual stocks, and now we're starting to sell off yet again. So the bulls made money here, the bears made money on the downside now, and now we're approaching again that oversold status where, hey, we may see another rebound heading into tomorrow, and that's kind of what I'm waiting for, to be honest. And the S&P, very similar, right? It's kind of the same thing. We got oversold, we popped up, and then we got oversold again, and now we're, especially if we break $3,000 tomorrow, we're going to be getting to that oversold territory, at least here on the 10-day, 30-minute chart, where we could end up playing a bounce back in tomorrow's session. Now, let's talk about the Nasdaq very quickly, which is extremely red, down almost 300 points right now, 280 points to be exact, down 3.15%. And very similar to the Dow, the S&P, the Nasdaq is getting rejected by the moving averages here on the 10-day, 30-minute chart. The bearish trend is still intact. We actually have a bearish cross here where the 50 SMA cross cross below the 180 SMA, which actually happened about a week ago, and that's on all of the major indexes, obviously, guys. And ever since then, that has been really a big downtrend that we could have read here when the moving averages crossed, but I didn't really necessarily read it at that point. I'm not sure if any of you guys did, but it could have been read there, although you can't just solely rely on a bearish cross to short the market or whatever, but it is just one tool that you can use to determine whether or not a sell-off is coming. So overall, guys, these markets at this point, they're getting just, oh my God, they're just getting crushed day after day after day. And right now is a fantastic opportunity, in my opinion, like I've been mentioning, to have a lot of cash. And this is why I always talk about, even when the markets are running up, don't be fully invested. Don't be extremely aggressive to the point where you don't have any dry powder to play with. And by dry powder, I mean some cash on the sidelines to take advantage of stocks when they do fall. Because although a lot of you might love it when the markets are going up, don't get me wrong, I love it too, but the reality is they don't always go up. They will fall, and they fall aggressively sometimes, where if you have that cash, again, you could take advantage of these opportunities. And let me tell you, back in 2018, guys, this is where I made a lot of money when we saw that 20% sell-off, right? I was buying the main winners of this, for me, of this sell-off, were Facebook and Apple. Guys, I was picking up Apple at $140 a share, $150. Facebook at $120, $130, $140. So much money was made from this period over the next couple of months for me, just because I had that dry powder, just because I had that cash ready to go, ready to rock when the markets were getting crushed. So let me know down below in the comments, what are your thoughts on the markets right now? Are you holding cash? Be honest with me. Are you fully invested right now and you don't have any dry powder to play with? Because that's what a bunch of people have told me before over these past couple of days. So I'm interested in seeing what you guys are doing right now. And if you don't have any dry powder, really use this as a time to save up your cash reserves. Stack it up, stack it up, stack it up. And you probably will still have time to take advantage of this over the next couple of weeks if the markets do end up just chilling and consolidating, or maybe even selling off even further from here. So let me know down below in the comments, what are your thoughts on everything? So now let's discuss what I personally did today. And honestly, guys, today was not an active day for me, not too active of a day for me. Yesterday was way more active. I got out of NVIDIA, made some money there. I traded TVIX a couple times, took a loss, made a profit on the other one, or the other trade. But today, all I did was ended up, whatever. All I did was I bought some Microsoft, ticker symbol MSFT. And this is one that is actually about to crack into the 150s, guys. Oh, wow, this is insane. They actually cut their sales guidance after hours yesterday, which really contributed to this kind of gap down in the after hour session yesterday. And you can see on the 1 day, 1 minute where that happened. Take a look here. We closed at $170. And then boom, it fell to about 166 after they came out and said that sales guidance cut, or the sales cut. And now we're again about to break into the 150s, which is insane. And for me personally, guys, I ended up buying Microsoft a little bit more, actually a pretty decent amount now, because we are getting into the lower 160s. I bought a good amount here pre-market. I think it was 163.20, 163.50, right around here. And at this point, my average cost has been brought down quite a bit, because the last time I did buy Microsoft, let me think, was it in the lower 170s? It wasn't yesterday. It was the day before I actually bought some Microsoft. So at this point, You guys know I've been scaling in the 180s, got in a bit early, but this is the beauty of scaling in to your swing positions. The truth is I wasn't in too heavy at 180, 183, right? I actually got a bit heavier here in the 170s and extremely heavy this morning in the 160s and the 163s. So at this point, my average cost is pegged at, I think, like 174, 170, maybe like 175-ish, right around there. Mid to low 170s is where my cost basis is right now, if I'm being completely honest with you guys, for Microsoft. And I do have another big chunk of cash waiting for Microsoft if it does end up getting into the 150s, which at this point, it looks like it might, maybe even today, right? And the truth is, I'm not looking to aggressively buy into Microsoft right now, or any stock at that matter, because it could drop even further. And that's why having that cash is great, because, you know, if this were to drop into the 150s tomorrow, I could buy another big bunch. But let's say I used up all my cash in the 170s, I wouldn't be able to take advantage of this sell-off. So for me, I'm just being patient with it. If it drops another nice leg down, I'm going to buy more. And this is just, in general, guys, a longer-term swing trade for me. Like I said when I first opened it up about like 10 days ago or something, whatever it was, right? And I said, you know, this is going to be a 1-2 month swing trade at minimum for me. And it seems like that's how it's going to be panning out here. So let me know down below in the comments, what did you guys do in terms of your trading today? Any buying, any selling? That's really all I ended up doing. And the truth is, I left a lot of money on the table today because, like I said, you know, there could have been money made in this bounce back today. The S&P bottomed out. We saw a nice little rally. This looked like it almost was a breakout rally before the bears took over again, and then the bears made money. So I could have made money here, but shoulda, coulda, woulda, whatever. You can't always make money, guys. That's the that's the truth. But I am kicking myself a little bit because a lot of these stocks, we'll go over them now, but a lot of them saw a nice rebound play, and I just missed it, to be honest with you all. So let's get into that. Let's start talking about a bunch of stocks and ETFs that I'm watching right now as the markets continue to drop. Oh my God, the VIX is up $7 right now. The S&P just cracked $100 in the red. Dow down 918 now. Nasdaq down 315. This is getting bloody. So off the bat, Microsoft, obviously I'm looking to buy more into this company. It's getting to a point at this point where it's showing some value, in my opinion. Not necessarily for a long-term investment, but just from a swing perspective, it's showing a bunch of value. Uber today down another 4%, and this is one of those bounce back plays that I regret and I'm kicking myself about, because take a look at the money that was made here with Uber. We actually bottomed out, double bottomed at 30.50 this morning, generally at 30.50, and that's actually a support, pretty major support. So if you were to read that, you saw the markets were turning around. This could have been an easy play in the morning that really offered a nice 10% from bottom to top. And at this point, Facebook, not Facebook, guys, Uber, it's looking like many of these stocks are at this point, it's looking like it's continuing its downtrend, right? So am I looking to swing trade Uber right now? Absolutely not. Am I swing trading many of these stocks right now? Absolutely not. I'm very select with the ones that I'm going to be swinging. But that doesn't mean that these stocks that I'm talking about don't offer that day trade potential, because they do, guys. They do. If you read the markets correctly, you'd be able to play it. Again, I'm kicking myself, but I wasn't able to play it today. But tomorrow, it could open up an opportunity, maybe even next week, guys, right? And a couple of these stocks, I'm going to talk to you all about, they did well despite the markets being down. SQ being one of them. This thing was up 4.7%, or it's up right now 4.7%. At its peak today, it was up 10%. I think it was up like $6, $7, $8 at its peak in terms of the share price. And this is because they reported earnings yesterday and they beat in terms of earnings. I think their EPS came in at 23 cents versus, here it is, EPS 23 cents versus the 21-cent estimate. Revenue, I can't seem to find it here, but overall, they did well. They did well. The investors, the traders out there, they obviously liked it, which is why the stock is up 5% today. This is really the main outlier that did well. Netflix was another one that was doing quite well earlier despite the markets being down. And if we're looking at the S&P, comparing it to Netflix, Netflix is beating the S&P today. It's only down 0.6% while the S&P is down 3%, guys. So this is holding up well, pretty well here. Ticker symbol NFL. And if we zoom out a bit here to the 4-hour chart, in general, this 380, 390 level for Netflix needs to be broken, at least for me, before I do end up taking a position. Because if we zoom out a bit to this 3-year chart, we can see the next tradable range for Netflix is around 380 up to about 420, and that's just in general where I'm looking to capitalize on the stock. But again, guys, I'm not really rushing into anything right now due to the markets in general getting squashed. So despite Netflix doing well today, it doesn't mean that it's going to, beat the market every single day. If the market tomorrow, let's say, dumps again, Netflix could definitely see a turn of events to the point where it's down 3-4%. And at this point, that's not a risk that I'm personally willing to take. SPCE, no pun intended, it's coming back to earth, guys. Today, down 25%, down $6.75. This is absolutely insane. The shorts out there, comment down below if you shorted this or you played puts or whatever. They're making a lot of money. And at the end of the day, guys, like I said in my Virgin Galactic video a couple days ago, I would never short the stock, but I wouldn't be surprised if it were to collapse, and it seems like it collapsed. But at this point, take a look at 19, 20, 21. This general area above that 180 SMA support on the 4-hour chart, this could be a level where it bottoms out in the short term, right? Although it is, in my opinion, it's still overvalued, it doesn't mean that it can't rally again. It doesn't mean that, guys. We see overvalued companies all the time rally hundreds of percent. And that's why, or that's really because hype around a stock. Maybe they report good earnings. Maybe there's a positive catalyst around the company. So if we get something like that for space, SPCE, I could see this thing launching off yet again. So Tesla, ticker symbol TSLA, down 12%, guys. $680 per share. We're finally getting back into the 600s now for Tesla. And like space, we're holding this 180 SMA here on the 4-hour chart, which in general, I'd love to see Tesla hold this. This could definitely be a dip buy for Tesla, but the negative thing is, if we do break that, guys, there's another leg down in store, in my opinion. Maybe back down to 650. 650 could be the next level, right? And the leg down after that, not saying it's going to go there, but who knows, with the CV right now and the whole market being crazy, the next level down could be 590. And anything in the 500 level, 600 level, regardless of the market conditions out there, I'd probably consider buying a little bit of Tesla for my swing position, right? In my swing account, rather. I think $500-600 poses a lot of potential for Tesla. And another one here is NVIDIA. Thank you, Lord, that I sold out of NVIDIA yesterday, because this is why. When you're in something, sometimes if you make a quick profit on it, the best idea is to just sell out, especially if you want to mitigate against the downside of the market. And listen to your gut, guys. My gut was telling me yesterday, although I had a nice little cushion on NVIDIA, yeah, my profit was nice. My gut was telling me just sell out. Sell out. No need in building this into a big swing position quite yet when the markets are volatile. And my gut was right. I would have lost money if I held it. It's down 4% right now, down $11. But it doesn't mean that I'm not watching it at all, because I am looking at it, interested in it to potentially re-enter, maybe in the 230 to around 240 range. I think it's a good value. And once the markets seem to stabilize, because, guys, although you may not think they are going to stabilize, they will stabilize soon, whether it's in a month, 2 months, whatever. Once the market stabilizes, I'm looking to buy some NVIDIA, no doubt about it. And another one I'm looking to buy, which I'm kicking myself over, kind of like with Uber, is MasterCard, ticker symbol MA. This is one that I talked about in yesterday's video as one that I would love picking up in the 280 to 300 level. Well, this morning we got the double bottom at 280, and I didn't end up taking advantage of the opportunity. That's my mistake completely. I left money on the table, like I said earlier in today's video, but that's okay, right? I missed out on 280 to 295, whatever. That's okay. Now I'm going to focus on the next trade, which, in my opinion, if we see another leg down in not Microsoft, MA here, we could maybe pick up some shares, let's say, back at 280 again, maybe 270, maybe 275 for a potential swing back up play like we saw today. And wow, man, look at the S&P now, 116 in the red. Oh, down almost 4%. This is insane, guys. The Dow Jones right now down 1,008 points. The Nasdaq down 350. I'm telling you guys, keep that dry powder. Take a look. Microsoft at $158 right now, and it's dropping. I bought at $163. So my position there is down about 2%, but the dry powder will save me tomorrow if I do end up buying more shares. I could buy some shares right now, to be honest, if I do end off the video, but I'm most likely going to wait until tomorrow, guys, just to play it safe, and we'll see. So overall, that's kind of what I'm watching here. There's a lot more that I'm watching, obviously, but this video is going to be too long. You know, TVIX, this is how you can play the volatility in the market. Let's say the markets continue being volatile, which I can definitely see it. This is going to be a nice tool for you to use to kind of mitigate, or not even mitigate, but to hedge against, let's say, some of your longer term positions. Yesterday, I played TVIX. I made a pretty nice amount of money there, and that allowed me to make money in the red day, right? SPXS, this is another one that I love trading, and this goes up whenever the S&P is going down at a 3x rate. SQQQ goes up whenever the Nasdaq is going down at a 3x rate. So these are all ways that you can really hedge against the market and make money even when the stock market is going down. So overall, guys, that is it for today's video. I hope you all enjoyed it. As always, if you did, feel free to go down below and hit that like button. And also consider subscribing to the channel if you haven't done so already. And since the markets are getting squashed right now, go get 2 free stocks from Webull, guys. It's free money at the end of the day with my affiliate link down below in the description box. Those 2 free stocks, one of them will be valued up to $1,400 with a deposit of $100. So go get your free money, stack up that cash, have that dry powder, and you'll be better off when the markets sell off because you can buy stocks at a cheaper price. So all of the links down below in the description box. I appreciate all of you watching. As always, peace out.